that they put into your retirement fund or ETFs or mutual funds, etc. And you can't see the danger, but I gotta show it to you because this is very dangerous.
Ever wondered what lies beyond the horizon of today's economic uncertainty? Prepare to embark on a journey of insight and foresight with Lynette Zhang. Join Lynette as she unveils the truth behind the looming debt bubble and its potential impact on our financial future. Discover why gold and silver are not just commodities, but lifelines in times of economic turbulence. Don't miss out on this opportunity to arm yourself with knowledge in the face of uncertainty. The countdown to financial empowerment begins now. Let's dive in.
Today, we've got to talk about the bubble popping because there are dangers that are so hidden from you and you can't see it, but it will impact you. So let's just dive right in. First, I want to talk about household debt because what we're hearing is that, oh my goodness, it's the consumer. The consumer is so much stronger than anybody thought that they would be. Well, are they really? Because in order to maintain a reasonable or some standard of living, what are they doing? They're taking on a ton of debt. In fact, household debt reaches 17.5 trillion in the fourth quarter of 2023. As all of this debt rises, which is why they're saying such a strong consumer, guess what's also happening? Delinquencies are rising. So let's take a look at this debt and the danger because they're looking at, like I said, it's 17.5 trillion. And then all that debt, guess what that's been turned into? Well, those payments have been turned into a Wall Street product that they put into your retirement fund or ETFs or mutual funds, etc. And you can't see the danger, but I got to show it to you because this is very dangerous. You've got non-housing debt and housing debt, and we got to look at both of those. Non-housing debt is 2.12 trillion plus all of those bets against it that you cannot see, plus all of the products that Wall Street has created and sold back to you. Remember, this is all about risk transfer. They take all that risk, they mush it together, turn it into a product and sell it back to you. Sure, that's what I want. You know what isn't risky? This isn't risky. This is the only financial asset, not one of two, not one of five, the only one that runs no counterparty risk. All these Wall Street products, that's what they are. Their credit, their debt, their counterparty risk. So the consumer, we're told, is so strong. Really? Because how they've continued to consume is by taking on even more debt. But guess what? At some point when you have this debt, you have to service it, you have to roll it over, you have to pay it off, or you default on it. Where are we in this cycle? Let's take a look. So in the fourth quarter of 2023, we were at, let me just put this in there, we were at 4.89 trillion in non-housing debt and 12.61 trillion in housing debt. That's more than double what it used to be back in when they first started tracking back in 2004. And you know, frankly, the answer to every single central bank, this is their answer. If they want to stimulate the economy, they drop interest rates so that you borrow more. Except now, because of the high inflation, people are forced to borrow just to feed their families. And what's happening, we're going to talk about. So debt has risen exponentially since 2004 and through 2023. It's dangerous. So let's take a look at those senior living defaults. Financial distress soared during the pandemic. And guess what? Is that over yet? No, it is not. It is still afflicting the sector. So these are the payment defaults where they just didn't make the payment, and these are technical because they were late. And you can see since 2020, since the pandemic, still really high. We haven't recouped from the global markets shutting down and business shutting down. Nearly 8% of the $43.2 billion in senior living municipal debt is currently in default. Uh-oh. What do you think is going to happen if there are not enough senior living facilities to accommodate all of us old people? Are you going to take your grandmother in? I hope so. You should. There are many countries where we don't have these issues, but in the U.S., that's not one of them. All right, what are we looking at here? U.S.-based entities lead the cumulative default debt volumes. Can you see how these are spiking? The U.S. is in gold, and Europe is in blue. There was 2023. Look at where we are. Okay, that was the January, February, March. This is January, February, March of 2024. What do you think? If this was the start of the year last year when interest rates were already up from the central bank's move, what do you think is going to happen the rest of this year? Your guess. This is the debt bubble popping. They may say everything is really strong and powerful and oh my God, the consumer's going to save us. Yeah, no, there is no savior from this except for this. Hard, tangible, sound money in your possession. There'll be time enough to go back in because this bubble popping is also what creates the opportunity. And right now, what do we have? We have gold and silver that are severely undervalued. And we have this real estate that is still severely overvalued. That's going to flip-flop. And at some point in the future, and we're going to know it because we're going to watch what the smart money does and see that cup formation. And by the way, I will tell you when I am converting some of my gold into those other income-producing assets after all of this is over, because we don't know who's going to survive this. Most defaulted debt remains concentrated in the U.S., where it has reached U.S. $33.2 billion in the first quarter of 2024, up 53% from the same quarter in 2023. What do you think? I mean, seriously, I want you to sit back and just kind of realize that defaults are up 53% year over year, first quarter to first quarter. That should scare the crap out of you. It scares the crap out of me, but I'm prepared. Are you prepared? If you're not, you better get prepared, because this is showing you that debt bubble popping and their ability to keep it hidden with all the products that they've created from this mess that you're now sitting in, you're going to know it. But by the time you know it, it will be too late to do anything about it. Just like it was with the CDO debt bubble popping in 2008. And I was paying attention to Lehman. That's my alma mater. I was watching it like a hawk. And I was still shocked when they allowed Lehman to go out.
Thank you for joining us on this journey of financial discovery with Lynette Zhang. Remember, knowledge is power in the face of uncertainty. If you found value in today's discussion, be sure to like, share, and subscribe for more insights into navigating the ever-changing economic landscape. Until next time, stay informed, stay empowered, and together, let's pave the way to a brighter financial future.